This is about Claude, a daily digest of news and discourse about the AI I keep coming back to. Whether you're a budding power user or merely Claude curious, we aim to keep you informed and help you make sense of where Claude is headed. Yesterday, Anthropic announced a legal plugin for Claude, a tool that customizes the model for document review, legal research, and drafting. A plugin. One of several, actually, and there's a sales plugin too. Within hours, shares in Pearson, Relx, Thomson Reuters, Wolters Kluwer, and Sage had all dropped significantly. The London Stock Exchange Group fell 8.5%. Bloomberg and The Guardian ran the sell-off as the story. Billions in market value moved in an afternoon. And then this morning, Anthropic published something else entirely. A blog post titled, "Claude is a space to think," a pledge that Claude will remain permanently ad-free, backed by a Super Bowl campaign airing this Sunday. These two stories look unrelated. I think they're the same story. What does it look like when AI stops being a prediction and starts moving prices? That's where we're headed today. Let's stay with the market reaction for a moment, because the numbers tell a story that no amount of Davos rhetoric could. Yesterday, February 3rd, Anthropic unveiled a legal plugin as part of a new plugin ecosystem. The legal plugin customizes Claude for the kind of work that law firms and legal departments bill thousands of hours for: document review, research, contract analysis, drafting. Alongside it came a sales plugin connecting Claude to CRMs and knowledge bases. More plugins are expected. Legal IT, T-Insider's headline captured the mood. Anthropic unveils Claude legal plugin and causes market meltdown. The word meltdown isn't editorial exaggeration. Public legal software companies, the firms that have built billion-dollar businesses on professional information tools, saw immediate substantial drops. Pearson, Relx, the company behind LexisNexis, Thomson Reuters, Wolters Kluwer, Sage. These aren't speculative startups. They're established, profitable companies with decades of market position. And the London Stock Exchange Group itself fell 8.5%. Not because of anything specific to its business, but on broader fears about AI disrupting data companies. We've spent weeks on this show talking about AI's economic impact, the Davos predictions, the economic index measuring productivity gains, the capability overhang, all of it pointing toward a future where AI changes how industries work. Yesterday wasn't the future, it was a Monday. What's striking is the mechanism. Anthropic didn't acquire a legal tech company. It didn't announce a partnership with a law firm. It released a plugin, a configuration layer that points Claude's existing capabilities at a specific professional domain. The market didn't react to a new model. It didn't react to a benchmark score. It reacted to an interface, a way of connecting existing capabilities to a specific domain. Sound familiar? We talked in episode 5 about how Claude Code went viral not because of a new model, but because people discovered what was already there. The same dynamic is playing out in legal, except this time Anthropic is doing the pointing, and the market is doing the reacting. The implication? The next time Anthropic releases a plugin for healthcare, or finance, or accounting, or engineering, watch the stock tickers of incumbent software companies in those sectors. The pattern is now established. The legal plugin didn't arrive in isolation. The day before, February 2nd, a startup called Midpage launched an MCP connection with Claude. Midpage is a legal research company. What they've done is connect their comprehensive case law dataset and Citata directly into Claude conversations. If you're a lawyer using Claude, you can now run complex legal searches without leaving the chat. The results come back with real citable cases, hyperlinked and verified. The CEO, Otto von Zastro, made a telling observation in an interview with Artificial Lawyer. He said the move was driven by customers. Law firms have been leaning heavily on general-purpose AI tools. Lawyers were already using Claude for legal work. Midpage built the bridge to make it better. Their pitch addresses one of the most persistent concerns about AI in legal work: hallucination. As Midpage put it, instead of hallucinating cases, it has access to cases that are real, citable, hyperlinked, and comprehensive. If you listened to yesterday's episode, On Whose Terms, this will ring familiar. Anthropic releases a first-party legal plugin. That's the controlled part. Midpage connects via MCP. That's the connected part. Together they create an ecosystem where Claude becomes not just a chat assistant, but the operating layer for legal work. And critically, Anthropic wanted to make clear that Midpage's connection isn't an official partnership. This is the MCP architecture. Working as designed, third parties plug in, Anthropic maintains the platform, and the user gets a richer experience without Anthropic having to build everything itself. The artificial lawyer piece included a detail that captures where things are headed. One commentator noted that Claude has such a great ecosystem of integrations and features, from web search to SharePoint to local files, all through one simple interface. Legal tech vendors, they said, are often falling behind in terms of versatility. That's the competitive threat in a sentence. It's not that Claude is better at legal research than LexisNexis. It's that Claude does legal research and contract drafting and document review and general analysis, all in one place through one interface. The specialists are being outflanked by the generalist. Now, rewind to this morning. Anthropic publishes a blog post with a title that feels like it belongs to a different news cycle entirely. Claude is a space to think. The post announces that Claude will remain permanently ad-free. No sponsored links, no advertiser influence on responses, no third-party product placements. This comes less than 3 weeks after OpenAI confirmed it would begin testing ads in ChatGPT for free and Go-tier subscribers. The blog post is worth reading in full. It's one of the more substantive things Anthropic has published recently. The core argument is that AI conversations are meaningfully different from search or social media. They're open-ended. People reveal more than they would in a search query. An appreciable portion, Anthropic says, involve topics that are sensitive or deeply personal. Then comes an example that crystallizes the argument. Imagine a user mentions they're having trouble sleeping. An assistant without advertising incentives explores the causes: stress, environment, habits. Based on what's most helpful, an ad-supported assistant has a secondary consideration: whether the conversation presents an opportunity for a transaction. Those incentives may often align, Anthropic concedes, but not always, and the user shouldn't have to wonder which is which. There's a subtler point that I think is the more important one. Even ads that don't directly influence responses would, Anthropic argues, create an incentive to optimize for engagement, for time spent, for return visits. The most useful AI interaction might be a short one, or one that resolves the user's request without prompting further conversation. That's a quietly radical statement. An AI company saying the best use of its product might be using it less. Anthropic isn't being subtle about any of this. They've produced 4 commercials, already on YouTube, satirizing AI assistants awkwardly inserting ads mid-conversation. A 30-second version airs during the Super Bowl this Sunday. A 60-second spot runs in the pre-game. The tagline, "Ads are coming to AI, but not to Claude." ChatGPT isn't named. The target is obvious. This is Anthropic's first Super Bowl campaign. It puts Claude in front of 100 million viewers at the exact moment the ad versus no ads divide becomes the defining consumer AI debate. So why does the ad-free announcement belong in the same episode as the legal market meltdown? Because the business model is the engine. Anthropic's revenue comes from enterprise contracts and paid subscriptions. That money gets reinvested into capability. Better models, more features, domain-specific plugins. The legal plugin exists because Anthropic doesn't need to maximize engagement or serve advertisers. It needs to be useful enough that enterprises pay for it. The blog post contains a line that reads almost like a throwaway, but is actually the strategic heart of the whole thing. Talking about their approach to revenue, they write, "Open a notebook, pick up a well-crafted tool, or stand in front of a clean chalkboard, and there are no ads in sight." We think Claude should work the same way. A tool. Not a platform, not a feed, not an engagement machine. A tool. When Boris Cherny told Fortune 2 weeks ago that we're an enterprise AI company, this is what that looks like in practice. You build tools so good that professionals pay for them. The revenue funds further capability. The capability disrupts industries. The disrupted industries validate the model. It's a virtuous circle, assuming the tools keep delivering. And yesterday's market reaction suggests the market believes they might. 3 things to watch in the coming weeks. First, the legal sector specifically. The plugin exists, but adoption is early. How quickly do law firms integrate it? How do the incumbents, LexisNexis, Westlaw, the established legal research platforms, respond? Do they build competing AI tools, or do they partner with Anthropic? The initial stock drop is fear. What happens next is data. Second, the plugin ecosystem more broadly. Legal is the first domain-specific plugin. Sales is the second. If accounting, healthcare, or financial services follow, and there's no reason they won't, the pattern from yesterday repeats. Each new plugin is a potential market event. And third, the Super Bowl. This Sunday, Anthropic puts its ad-free message in front of a mass audience for the first time. Whether that lands as principled or merely as marketing will depend on what people already think about AI. But for the first time, there's a major consumer-facing message that isn't AI is powerful or AI is coming. It's AI should be trustworthy. Yesterday, for the first time, an AI plugin announcement moved billions in public equity. Today, the company behind it told 100 million people it would rather sell tools than sell attention. Whether those two moves are philosophy or strategy is, I think, the wrong question. They're both. That's all from us, Neil and Claude. Thanks for listening. We'll catch you tomorrow.